Welcome back to Be Great Economics. This is Nate. Let's get started. Weekly update. We're going to be talking about some of the actions that occurred today and last night following news from Russia and the Ukraine, talking about how Russia is looking at pulling its vehicles and equipment away from Kyiv, in order to avoid continuing a fight for the city. And then on top of that, Ukraine confirmed that they were in fact seeing the enemy's equipment moving away, and that they were no longer getting attacked in Kyiv. So a form of ceasefire, not official ceasefire, but a form of halt to actions has begun in the capital, and that has sparked a little bit of a manic response today. That doesn't necessarily mean that any of the real risks that underlie, nor of course the inflationary risks, are really gone, but it allowed an alleviation of pressure today and caused a little bit of volatility that might have shaken out some hands. So we're going to cover some of that today. We'll look at the dollar, and you can see on the DXY that we had a huge drop finally. I think, as we look at other currencies, let's look at the euro today. The euro strengthened on this, and what I think that occurred here was that there's some confidence. We have long-term support that we were bouncing off of, and some people were like, oh, this support's going to break. Well, not so sure. They're still making payments to a lot of other nations in euros, and there's a demand for the euro. I think that this news and this event throughout the month has created a little bit of a sell-off here, but you saw with the ruble overall that we're seeing some strength show up here. And I think that overall we're seeing a response where the chaos is kind of getting out of here. The fear trade, people are getting accustomed to that. This fight isn't necessarily World War III off of its back. And so the fear in this event is kind of alleviating to an extent. On top of that, Russia is demanding payment for oil from non-friendly nations, the European Union, in rubles, so if not gold. So this is spiking a little bit more of the demand for the rubles, because ultimately, even though the EU has said, most of the EU nations have said no at this time, there's really not a choice, because the oil dependency is so high. There's really no way that they can continue without it. And so let's look at gold real quick. We're going to talk about how the volatility in here wicked us way down. And this morning I was like, oh my God, my trend isn't holding. What happened? But then sure enough, it completely reverted, because it was like, oh, okay, right. I saw the wick down. I saw the bar down, the candle opening way down here, long before I got the news about what was said. And I was like, okay, this is going to be a pump and dump scheme. We're going to go, oh, there's no more fear. Well, actually there is. Russia's still in the Ukraine. The war is still going on. And Putin and Zelensky are still not going to be talking directly to each other yet. So I think that at this time, the fear trade is still in here, but we had a moment of brevity in that trade. So let's look at silver. And this one was the one that shocked me the most because of how big this wick down was. And I have been following this one for 6 months straight of like, this is Wyckoff accumulation. This is happening. Here we go. And I was like, no. This one shocked me. I was like, how did this happen? And we're going to see it continue on this accumulation trend, because it's had this building before even the U.S. Army had, or the DoD had any real recollection of what Russia was doing here. Governments were not entirely preparing, 8-9 months ago for this event. We saw last year China begin to halt some of its exports, but we don't know if that's because they preemptively prepared for Russia, because Russia also didn't seem to prepare too much ahead of time. I think that overall that this event, this accumulation event, is a global macro event, and we're going to continue to see it build through this momentum anyways. We are in a range where this could invalidate it. I really thought that 2480 was going to hold strong, and we're below right now. I will continue to watch this one. I would say that invalidation would be a daily close below 2450 or so, because we should see this ascending. We shouldn't. Now it could be, we'll give it the benefit of a doubt that it's essentially just a bull flag that we're getting here. Do it as a form of parallel. We're effectively getting a bull flag, and so we could continue up. This consolidation just shocks me at this time. But if we see a big sell-off here like this, these strong wicks, they tend to be points that lead to long rallies. And so if we were to take a move like, we'll take it from a long spring, like this one, you get good percentage, 5 to 10% moves in that time frame. So I would think that if we got this wick down here, we should get up to the top of the flag again. And if it is a bull flag, then we should get this length of move, which would still put us towards the $28 to $30 range. So let's zoom out here because I'm going to talk about my point and figure targets I applied over a 1-year period based off of the general rate that we've been performing and what I kind of expect. This is kind of a roadmap. Do not take this as like trade advice. This is just me plotting out how should this generally respond based off the price targets I gave, and assuming that we're going to go through a trend of consolidation at each one of these point and figure targets. Now, I expect silver to outperform even the top point and figure target in the longer run, but I don't have much to support other than at least the first one should occur. So, a good 20% increase in price would be helpful, but we're looking more for a 3x at least just to hit what this accumulation was setting for, and then we might see some longer consolidation. If we say this is an Elliott wave and go up 1, 2, 3 from there, then we'll get an ABC down, 1, 2, 3, 4, 5 from there, and then we'll get an ABC down and somewhere back in the 30s again. Everyone will think it's all over and what a waste of time, and then we'll go up to triple digits or something like that. The main thing with this trade with silver and gold is if you're really bullish on it, you should be going into miners. And what I want to point out here is in the SILJ, we saw more resilience. We pushed up higher into the zone here, and that's really showing that the people buying mining stocks right now are more bullish on the metals than the metals are acting right now themselves. And when you look at the futures prices on the metals and the contract forward, I think we're seeing momentum build that the market is ready for metals to perform better. Everyone is saying it's just a fear trade, but remember we have inflation fears building throughout this whole time, and this move has been going on for 6, 7 months. So we should be seeing movement out of this zone shortly here. I would give it a 90% chance up and 10% down. Doesn't mean it won't go down, but I'm going to give it a probability of very high that we're going to continue to finish out this accumulation zone. So one wick down isn't necessarily the end of the world, and as you can see, there's some resiliency in there. We could see a little bit of a downtrend before we break back up as we continue into a kind of bullish flag, but we'll watch those invalidations. Let's go to the Nasdaq. We'll see what happened to it over the past week, and we've obviously been on an uptrend. And today's news actually held anyways, and I think it's because we've had a short squeeze meet into bullish buying that's continued on this trend of expecting it to go. Now, if we look at our indicators like our RSI and our MACD, moving average convergence divergence, we can see that we still have room. There's plenty of space in here for this move to continue. Now, I think it's probably more likely we go down a little bit first and then come back up. If this is some form of accumulation pattern, we should at least see consolidation here, if not another downside, and then come back up. Breaking the downtrend here, it could have been that this was the last buy-up point, this was the last dip. If we do get that, I would expect this to run pretty hard. We can also see that this repeats in the S&P 500. Same pattern, same trend. So, but outperformance, right? We want to talk about how the Nasdaq is outperforming the S&P 500 and how tech is going to head into a blow-off top, as I've talked about in previous videos. We saw that this trend line broke, and then we broke down below it. We've seen the accumulation trend. This is more or less a W bottom pattern at best. But we see that we're back above this support as well. This is good if you're betting on tech. If we see some kind of consolidation in this range, that's fine, but it doesn't really matter on the SPX. What I want to, or sorry, on the S&P and Nasdaq pricing. What I want to bring up here is, let's go to the weekly. We can see that we're getting some strong green candles into this range. And these strong green candles are reminiscent of some very strong bull periods. Back to auto. And we'll go back to the 2000s and let's look at this one. We had a few points of consolidation once we got above, set above it, and went. And this has been longer periods of time. And so what I would expect is that if we're going to get a really strong run, we could get this where we just get mostly green weeks and some of the biggest weekly candles we get for a long time into that final blow off top. And so I think that that probability remains. I honestly give it probably, personally, I see it as like a 30% chance right now, because if we can't break above the all-time high in the first place, there's nothing we can really say. But once we get above and set on top of it, I'm going to start saying that that's going to be a really, really strong indicator. Right now, I don't have as much confidence in that level of performance. This remains a probability. Continuing on our merry way in kind of a lackadaisical manner might happen, but I don't see it playing out very well here because of, again, we come back to valuations of companies and how everything has built over the years and the inflation expectations. So either we get a melt up or we begin a decline of some type, at a minimum sideways action, which would coincide with inflation while at the same time having overvaluation of stocks. So this form of stagflationary response could be relatively healthy, and it would be annoying to investors who are anticipating growth. Smaller stocks or individual stocks that have fallen 50+% might recover and make you another 50% gain, but ultimately they may just sit there in their low end. So I'm going to continue to watch this, but for now it's not my focus trade. I'm sticking to the precious metals and crypto because they have a lot more opportunity in them at this point in time. So let's look at oil. We'll check out how we've been doing so far. And a lot of people are trying to call that this is the top and that we're not like long-term top. I'm not getting where this logic comes from. If that the people in the world are going to stop using oil because we're going to go to renewables, okay, except that there's a certain cost input to production of oil. So even if we reduce our demand for oil, we will reduce productivity, and so prices will still maintain a certain range. Right now, this spike had a lot to do with fear speculation on Russia. But overall, this trend still remains intact. So I might expect a distribution and drop back down into the hundreds. I still would say that these 80 zones, we could possibly back in here and get a low in here before we continue back up. But I don't think that for long term, next 2-3 years, that this is the top. So I would still anticipate some higher performance from oil over the next few months to the year. And then finally, I've got two more speculative assets I want to talk about. This one I brought up before, but I wanted to kind of keep it on the low for now because Thcx, because we've been on this constant downtrend, and there just hasn't been a lot to bring up here. I brought up when we broke this smaller descending line. I brought it up a while back when I thought this was support, and so my problem here at this point is that we are back to 2020 valuations for marijuana stocks, and that is not bad. This is good pricing to be buying in, and you can see we now broke the long-term downtrend in this very manic price action. And if we zoom out a little bit, you can see that this is super classic, this is super classic movements for a bull market run and euphoric phase. So I would think that we have hit some form of capitulation down here. Now that, adjusting for inflation, you've actually lost money from what you bought if you bought back in the bottom in 2020, which is insane. This is the only point where we were below this line. And now we've kind of set into it in support, and we've actually come down to those points again, which is just crazy. So there's been some rallying, but very low volume. There is currently the MORE Act being talked about in Congress again, as they try to talk about making it so that it's decriminalized in a manner so that they can allow them banking access, which is the best thing for these companies, which honestly need it. And this is a little ridiculous that we're still here, but the politics aside, ultimately these stocks are becoming a reasonable value play, and so I would think that there's a reason to start holding on to some of these assets. MSOS probably has better assets. It has Curaleaf in it, which I like that individual stock a lot more. So I would just take a look at some of those, but this is the buying zone for me again. I came in and bought some in here. I really didn't let go of my positions on this downtrend because I didn't see the point, because I still think that there's an opportunity to build from here. So I'm going to stick to purchasing in positions in this range. And then finally, we'll do Bitcoin. This one's kind of interesting because it's frustrating to me because I do think that my current theory is that it's going to start operating, or it has shown signs of operating as a monetary hedge asset. But overall, this move had more to do with tech than anything else. So we've seen that nations continue to see crypto, or specifically Bitcoin, as a alternative currency. Russia even said they would accept it from their friends, and you can see the game theory at play here, where if you want your friends to pay you in an alternative trustworthy currency, why not Bitcoin? Because if they buy it, they're going to increase the value of the Bitcoin they purchase, so then they're benefiting themselves and still purchasing more oil. So they're getting both ends of a good deal on both ends, but they won't accept it from their enemies, meaning that they know that it would be beneficial for the United States to purchase Bitcoin and then have it appreciate on the news that they're purchasing Bitcoin, and then be able to purchase more oil for it. So oil is still priced in dollars, but being able to be exchanged for gold, rubles, currencies of friendly nations, and Bitcoin, which is a very interesting scenario to be in. Right now, I would expect some type of consolidation here. You see that we have these tall wicks in place here. There's still a lot of great momentum on the weekly. Everything is looking healthy, but I would expect some form of consolidation before continuation from here. This is good if this was an accumulation trend, but we are correlated to tech right now. So this, to me, unless we get a melt up in tech, I would not expect Bitcoin to be outperforming to its all-time highs. If we do get a melt up, it would continue on with it. If stocks continue to crash, I would expect that Bitcoin would eventually find its bottom somewhere in the low ranges here. If we get a massive deflationary spike, we could see the really big lows back down into the 19,000 range. But unless we get that deflationary impulse, I'm expecting to stay above like the 28, 29 range. So thanks for watching. I will see you all again next time.